Mortgages in Canada can feel like they're written in another language. Fixed, variable, insured, conventional, and a stack of paperwork that somehow gets thicker every year. But here's the truth. You don't need to become a mortgage expert, you just need to understand what actually matters. We've seen buyers sit through lender meetings, nodding politely, then call us afterwards like, wait, did I just sign on for 30 years worth of payments without knowing how any of this works? So today, let's fix that. By the time you finish this video, you'll understand more about mortgages than most first-time buyers do before they sign. So let's keep it simple. A mortgage is just a loan you're going to live with day to day for years. How it's structured will shape your monthly budget, your stress level, and your flexibility when life changes. This video is not a banker's training course. It's buyer's knowledge. Real talk, no jargon. No pressure, just clarity. Here's what we're breaking down. Fixed versus variable rates, terms versus amortization, down payments and mortgage insurance, pre-approvals versus pre-qualifications, rate shopping, penalties, flexibility, and everything to make a mortgage make sense. Fixed versus variable. What's the real difference? Fixed means predictable payments. Variable means your rate can change. And depending on your lender, your payments or your amortization can change with it. In 2026, a lot of people are still feeling rate anxiety from the roller coaster of the last few years. Here's the thing. A variable can save you money in the long term, but only if you're mentally and financially ready for the movement. Fixed feels safer, but it can come with higher prepayment penalties. We had a buyer in 2024 who chose variable to save money. Then rates jumped, and so did their payments, by hundreds of dollars per month. Term versus amortization. Two words buyers mix up. Term is how long it lasts, usually 1 to 5 years. Amortization is the total time it will take you to pay off your mortgage, usually 20 to 30 years. Most Canadians renew several times. Short terms give better rates, but expose you to renewal risk. Rate shock happens when buyers plan only the first term and not the next one. Pre-approvals are not promises. A pre-approval is a budgeting tool, not a guarantee. It helps you plan, but lenders still need income to verify what you make. An appraisal to value the property, and updated debt information in order to complete a full underwrite. Think of a pre-approval as a direction, not a destination. Penalties, fees, and flexibility, people rarely ask questions that matter the most. Like, what happens if you break this mortgage? What are the prepayment privileges? And can you take the mortgage with you if you move? Some fixed rates come with penalties that could hit 5 figures depending on the lender. Flexibility isn't a bonus, it's protection. Many Canadians break their mortgages before the term ends. If you put less than 20% down, you need mortgage insurance, and it gets added to your mortgage. It protects the lender, not you, but it allows you to buy sooner with a smaller down payment. For many buyers, it's simply the cost of entering the market. Let's bring this home. Build a mortgage team. Work with a broker and a lender who actually explains things. Ask these 3 questions every time. What happens if I break this mortgage? How much can I prepay each year? Is this mortgage portable if I move? These 3 questions alone can save you thousands and match your mortgage to your life. If you want stability, go fixed. If you know you'll move in a few years, don't lock into a heavy penalty fixed rate product. If you value flexibility, prioritize it intentionally. Your life should dedicate your mortgage, not the other way around. You don't need to master every mortgage product in Canada. You just need to understand your mortgage and why it fits your life. And that's how confident buyers win in 2026. If you found this helpful, hit like, subscribe, and share this with someone who's shopping for a home. And if you want help thinking through your own mortgage strategy, reach out. I'm Clyde Bryant. Thank you for watching.